right, let me see. Start the event. Cool. Awesome. Let me share my screen. What screen? Here we go. All right, test. Looks like we are good on Discord, and I am picking up on YouTube. So welcome back, everybody. My name is Spencer Riegle. It is March 24th. We are doing a bit of a different time slot, kind of going forward. So for those that are used to kind of hopping on during the day on Tuesdays, which would be around noon Chicago time, so Central Time, we are adjusting to Monday after the cash close, so 4 p.m. New York. Part of the reason is I'm usually very busy, Chicago noon, on the desk, and so want to make sure that I can make these weekly and make sure that there's some consistency here to talk about markets. Another reason is from what we do and what we look at, right, which we'll get into a little bit today. Our week starts on Saturday night here in Chicago. So we see the crypto open as 0 UTC on Saturday. And so by Tuesday, a lot of the trade is already done. A lot of trade starts Saturday night. We've seen a lot of active Saturday nights the last 2 weeks. This week was a little bit different. And then off the traditional futures open, right, you see a lot of pricing changes Sunday night that obviously affects Monday. And then by Tuesday, it's usually, it's already priced in. So we're kind of coming in and talking about after the facts and those kind of things. I am on during the weekends. So if you are tuning in to YouTube and want to hop over to Discord and chat during the weekends, I do pop in from time to time, check prices, and then obviously off the crypto open, I'm always on the desk monitoring and watching. So without further ado, let's kind of start it all off. Some house cleaning to start off. We are very excited to announce that we launched our new website. So if you have any questions or you haven't seen it yet, head over to DARMA press as many buttons as you'd like on there. Take a look. We have a free personality test over there. So if you go over to the sign up page, you can see all the offerings here, the free trader assessment and education. Get in there, test it out, let us know what you think. You can let us know here in the Discord and the Bookmap Discord, and then we can go from there and talk about all those kind of things. So that's exciting news. And then let me make a quick introduction. So as I kind of already mentioned, my name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. You can follow me or reach out to me on Twitter @ my last name in all caps. And then I am also active on LinkedIn. So a lot of people reach out to me there. Feel free. It's just my name. And I'll get back to you guys as soon as I possibly can. Disclosures before we kind of hop in and go through this week and what's kind of going on. And the markets are active per usual. But all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, digital currencies, Forex, CFDs, any product involves substantial risk of loss and is not suitable for all investors, right? And so what we like to start each week off with is talking about only risk what you're willing to lose, right? And we call that risk capital. So if that risk capital or that money in which you're trading is going to impact your groceries on Friday, it's not a great decision, right? That's not risk capital. That is capital in which you need, right? So make sure that as we're kind of going through all this, that is the most important thing to note. Reason for that, 2 reasons. One is we're risk managers, right? So always got to talk about risk before taking on risk, right? So risk and reward. So the assumption of risk and then mitigation of risk, right? always need to start with the latter versus the prior, right? There's always opportunities out there, but if you don't have a seat at the table, you can't take the opportunity when it exists. 2, psychologically, if you are thinking about your grocery list when you are putting on a trade in Bitcoin or Ethereum, you're not going to make logical decisions, right? It's predicated and it's driven psychologically by what you need for that groceries, what you need for your life. It's not logical thinking, right? So there are 2 caveats when you think about risk capital, right? So for those that have not kind of hopped onto the stream prior, we kind of break it down and make it super simple. We talk about macro events from the last time we hopped on. So that's been a couple weeks ago. We talk about weekly price map update, and price map, for those that are unfamiliar, is our proprietary data and analytics. So it is a quantitative and qualitative assessment kind of markets. So because we are in the latter half, basically what we call the settlement phase of the month, which is the last phase, we break each month down, each week down, each day down into 4 sections. There's some different things in which I can show you this week, which will be really interesting. So we'll dive into that, and then we'll talk a little bit about strategy, right? It is Monday. Market has made a large move since the open, right? Sunday night, we saw a bid up and then continuation. And the bids held firm throughout the regular session today in U.S. hours. And we'll get some new data that we'll drop into the Discord. So if you're on YouTube, make sure that you do hop over to the Discord. And then we can talk about kind of what that means as we head into the rest of the week and the end of the month, right? This is end of quarter 1, so there's always interesting things to think about and position differently, right? So macro, top down, let's talk about the big events. And it's not anything largely different, right? So there's a lot of positive things that have been happening behind the scenes that are really not getting priced into the market. So one, obviously the Bitcoin reserve. That was a positive note that came out of the news this month. It was not in the nature of buying more Bitcoin, but kind of setting up seized Bitcoin and the acknowledgement of not selling for future Bitcoin, right? So the market discounted that, and obviously that was an incredibly volatile night in 48 hours. And we talked about that a little bit earlier in a couple earlier streams this month, but that was a big one, right? That was pretty much priced into the market and then got discounted on the market was incredibly optimistic that the U.S. was going to come out and just buy Bitcoin and set up this whole strategic reserve. And while that may happen in the future, and it likely starts to happen on the state level prior to the federal level, it didn't happen here and now, and the markets do price things here and now, and then they also forward look, right? So that had a negative impact. Next few things are the escalation in trade war. It's not new, right? So that's not new news, but it continues to escalate, obviously. And that's really been the tree shaker this month for global risk markets. And when I say global risk markets, I don't only talk about crypto. I talk about the S&P 500, the NASDAQ. I talk about interest rates. I talk about currencies abroad, right? And so there's a lot of markets that are volatile right now, and it's basically across the board. Why? Fundamentally, there's a lot of change that's happening, right? And so out of the Trump administration, they are doing some things that is not terribly conventional, and so that has shaken the tree. And when I say shaken the tree, it's a metaphor for kind of inciting change. All change has an inherent friction initially, and markets don't like friction. So they were a bit overpriced in terms of evaluations, almost priced to perfection, and so the markets discounted it, right? And that was what we've seen in the S&P 500, what we've seen in the NASDAQ. Has been quick, right? And so there's been a massive outflow initially, and we've seen that also in crypto markets as well, right? Bitcoin is down around 25% from those highs, 109 down to 80. And then Ethereum much worse, right? So the 4,200 highs in December of 2024, we touched into the 1600s this last month, right? And so while Ethereum, we can talk a little bit about that, is seeing a lot of declines outsized Bitcoin, it has still found some buyers here around 2,000. So we'll talk about some of those levels. But from a macro side of things, let's talk about specifically Bitcoin and specifically Ethereum, right? Because that's what we kind of cover here on a weekly basis. One is I have been involved in crypto markets for the better part of it's been 2017 was my introduction, and then I was full-time 2020, but I was very, very involved 2017, 2018, took a bit of a break. So I would say better part of 7 years from watching markets. I have been involved in the options market in crypto basically since the inception. So 2020, I started to get very involved in the option side of things. And Bitcoin, from a volatility perspective, is compressing. And that's one thing to note, right? And I guess you can say it on an obvious basis by the fact that we haven't really seen a large decline outside of 30% in quite some time. Normally, in 2017, I remember Bitcoin priced at 3,000. It went to 20,000 in the period of, less than a year. And then immediately it went down to 10,000 in a day. I was trading that day. And then it went right back to 18,000. And then it rolled over down to 6,000. And then it went down to 3,000 again, right? And so those were normal cycles, right? And as kind of the institutionalization has happened, things have changed fundamentally, right? ETFs coming onto the scene, right, have really changed the dynamics of the market. And so I would like to kind of talk on a broad base, and kind of what I am monitoring is kind of the vol compression of the asset class generally. What does that mean? That means basically the more capital that can be introduced as a buyer into the market decreases the declines in which that market can have. In volatility terms, that just means, hey, a market that goes from 3,000 to 20,000 and goes right back down to 3,000 may not actually do that round trip. It might go from 3,000 to 20,000 and go down to 10,000. And then the next year it might go from 10 to 30 and then down to 25, right? And so the declines, and if you look at basically at the money vol, you'll notice that vol of vol, which is how much volatility changes, is starting to compress. Some of the reasons are it is becoming a more institutional product. It's more accessible, right? So if you pull up your Robinhood account, you can buy it. If you pull up your Coinbase account here in the US, your Kraken account, you can buy it. That's a cash buyer. That's a willing buyer. Abroad, right? Some of the perpetual markets, those are leveraged markets, right? You can step in and buy some of that up, right? Now, if you look, and it's tax season here in the US, if you pull up your IRAs, you pull up your Roth IRAs, you're looking to some tax strategies and you want to do some tax deductions, all these kind of strategies that people use, guess what? You can go out and buy IBIT, right? What is IBIT? IBIT's a spot ETF. What do they do with your money? They go out and buy spot Bitcoin, right? So basically, it's starting to fundamentally change the willing buyers in the market, which is bringing more capital to the market, which is compressing vol. Long-term, vol compressions, and as kind of emerging markets, this is normal, right? Why is Ethereum different, right? And Ethereum seeing that discounted or that outperformance to the downside, it's not the brand so far to speak, right? There's not an Ethereum strategic reserve, right? Ethereum is being talked about as in the stockpile, right? But it is not being talked about, and it is not the forefront runner, right? And so that's why you are seeing some of those outperformances to the downside in Ethereum outside of Bitcoin, right? So fundamentally, the market's changing, which is really interesting to watch. And it's in a much different place than it was when I first started, which was, 9 years ago, roughly, but actively involved. Yeah, so 2017, so it would have been 8 years ago, roughly, 7 years ago. So yeah, things are changing. That is an interesting note to watch, right? The S&P, the NASDAQ was down 13% and Bitcoin's only down 25%. So something is different here this time, right? So let's talk about kind of the outlook for the week. Let's dive into both Bitcoin and Ethereum and pull up some of these charts. So if we head over here, what you'll notice, and I'm going to blow up each chart, but this is kind of our full view, right? And so on the left, you're going to notice that you have the price map. I have multiple different durations, right? So here on the desk, we look at multiple different durations to make decisions, and it's incredibly helpful for understanding broader pictures, right? And so because it is the end of the month, we have the monthly up here. We also have some weekly structure to look at, and we have some daily structure to look at, right? So let's kind of mitigate the daily here, because daily we get new data in about 3 hours, so that's going to roll off and change, and I'll post that in the Discord for you guys. But let's take a look at the monthly, and then let's take a look at the weekly. So the weekly is the newest and the freshest data. So let's blow that up because I want to make sure that I can see it here. Let me pull it up on OBS and just make sure that it's viewable on YouTube. Yeah, so one thing to note is fundamentally it's the end of quarter one, right? Bitcoin is over its previous month's close. It's down on the year. However, rebalancing and inflows, if you want to have Bitcoin on your balance sheet, it's a cheaper price to do it right now, right? Because it's off all-time highs. You're getting a cheaper price. If you're investors, which a lot of hedge funds, a lot of basically institutions that are asset managers, their job is to service the client, right? Sometimes the client wants to be allocated in certain ways. Sometimes mandates are set up to where if Bitcoin is up on the month, you need to be long, right? And that's the client's demands. And so the fact that it is up on the month, right? So we can kind of zoom out here. You can see here the previous month's close, that PMC number, that is what defines last month's close. So the fact that it's over that means it is positive on the month, right? So let's take a look at the week, right? A couple things to note. The R level, which we see as the green level, that's where the energy of the market is, right? That's going to change each week, each day, each month that we get new data, right? That gives us context of the regime in which we're working with, right? This regime is what we call an R8, right? Basically, that just means if the market's going to make a positive show, the expectation is that it's going to be almost like a magnet to this level, right? There's certain parts of this price map that will dictate that that's an invalid statement. But so far, let's take a look, right? Saturday night, this is the open, right? Bitcoin opens up, we're around 84, the market goes bid, right? What we talk about every single week is the directional. We start every duration in which we start trading starts at the directional, right? Where's the directional in relation to price? Why? It's a very, very simple sentiment gauge. Where's the market? Is it over the directional? If it's over the directional, I can make a play higher. If it's under the directional, the idea is it's going to make a play lower, right? It's the middle. It's the line in the sand. It is where you can take a stance, right? So immediately off the open, you can see the market held the directional to the tick and basically just priced up Saturday night. And the moment that it breaks out here, that's called a directional breakout. That's a positive stance by the market. That means that as long as the market continues to base, right, it's going to take a shot here at 8605.5, which is the weekly CR plus. That's what we define as our internal critical range, right? It's a minor level, but it validates what this directional breakout would be, right? So a market that can go out of this yellow zone into the black and can go back into the black over the brown zone, that validates the breakout, right? So the fact that we broke out, that's positive, right? If you correlate it to some of those longer time frames that we're also monitoring, the previous month's close, and you add a little bit of discretion, which is, hey, anybody that's a buyer of this market has to be long, right? If they have clients, they have to be long. The reason for that is they're going to underperform if the market's over the previous month's close, which means the market is positive. You pull up Yahoo Finance, Google Finance, it'll show a green number next to the month. They have to buy. They don't have a choice, right? So where are we going to go? We're going to come here and test this UP. On any given week, right, we've run the back-tested data. There's about a 61% chance that we're going to have a critical range breakout within Bitcoin, right? Critical range breakout is this red area down to this blue area. All it means is there's a 61% chance that the price, this white line, is going to go to this black area or this black area, right? Or sorry, this black area down here. That's what we define as a critical range breakout. That would be normal, right? It's actually abnormal if price doesn't move outside of this range, right? It happens less times than not, right? So if the market's going to take a positive show and make a positive show, logically, we have to assume that the edge for the 61% increases, right? Obviously, this is back-tested data. However, it gives context, right? All of this is about context so that we as traders can make the best risk-adjusted decisions, right? Market goes over and tests the previous week's high. Well, if the market's over the previous week's high, it really has a shot to go where? Well, you can lean on some larger time frames, but the idea is the market's going to take a shot at this green level. That's the magnet. That's the energy in the market, right? If you pull up some of the options, kind of positioning in the market, it also aligns there, which is super interesting. I was just on Twitter and some Amber Data, who is a prominent data company in crypto, they're widely respected, posted some alignment at 92. I thought that was really interesting because that's exactly what our data shows. That would be the magnet of the market, right? Where would that price be invalidated? Well, let's take a look. That price, if the market can't hold over the previous week's high, then the assumption is that the market cannot make a play for 92.5 through the duration of Saturday 0 UTC, right? It's that simple, right? So as long as the market is going to hold here, which is about 87,300, 87,400, there's no real reason to sell, right? This trade, which was basically Saturday night all the way into today, Monday morning, was a one-way trade, right? Yeah, you had one pullback here. It was quickly rebought and supported, and then it was priced here. There is nothing here that says sell this market. The only time in which it says sell this market is if the market gets heavy and cannot hold the previous week's high, right? That is a reason to be concerned. If not, then the next logical answer is to look at the green area, right? So from 90 to 92.5, that's your area to start thinking about trimming down, start thinking about different decisions as we head into end of month. If you're long the underlying asset, right, and you're looking for some enhanced yield, that's an opportunity, right, to start to look at microstructure, price structure breaks, to add some covered calls, some ratio call spreads, right, that carry a negative delta, but that bring in a credit for that portfolio or for that position, right? Here and now, yeah, absolutely, there's stuff to do on a daily basis, but at the same time, if you take a step back, the best thing is probably to stay relatively hands-off until the market proves to us that it can't trade or can't hold a trade over 87,400. Why? Because otherwise the trade is just to hold Bitcoin and keep holding it, right? So that's basically the outlook right now, right? And so let's talk about the other side, because there's always the other side of this trade, right? So in a scenario, let's say we head into the turnaround Tuesday, right? Which is kind of a fun saying that is often passed around in trading, but it's basically saying that, okay, Monday's price gets reversed, right? So if we can't hold over that 87,400, that's your sell, right? That's where you can be a bit more hands-on and say, okay, well, let me at least trim down these long sides that I have, right, from the weekly open and reassess, right? Doesn't mean you can't add them back on, by no means, right? But it just means that the market is not performing optimally. So what's the point of taking risk, right? We want to make good bets when good hands are being dealt to us, right? That's all. So 87,400, let's say that becomes a heavy level for the market. If that's the case, then the market's telling you to back off a bit, downsize, and reassess, right? If previous week kind of gets choppy, that gives you a tell that, hey, lightening up also is a good decision because there's no clarity, right? If this becomes a top, right, 87,400, the expectation is we just rotate right back down, right? And it just becomes this large choppy range, which we've seen for the better part of the month, right? The last couple of weeks have just been that, right? It is the last phase of the month, so there is a very possible chance that we continue to kind of just one-way trade it into end of month. People get their allocations, get the Bitcoin on the books as they head into Q2, right? Let's pull up Bookmap and align some of what we just talked about with resting liquidity in the book, right? Markets like to kind of gravitate towards resting liquidity, right? There's a lot of reasons and why. However, let's look at where it exists. 90,000, you can see there's around 243 coin sitting at 90. That's in alignment here with the weekly CRX Plus. That would also be this area, this whole range here is if you get a base here and break out, let's say into Tuesday, that would be a normal kind of top for the week, right? Absolutely, this is the magnet. Absolutely, right? However, if you do get a resting seller here by looking at Bookmap, and that's why it's also important to kind of get correlating information from across the market, that would also be relatively normal, right? And so if the market's good and it wants to test the screen, you can think of this as a ladder. It needs to price over 90, get through that resting liquidity based on the resting liquidity and take a stab at it. Otherwise, if the resting liquidity here, which you see in the multi-book perp, sits on the offer, refreshes, that's a willing seller. They have a lot of inventory, right? And that inventory should and needs to be respected, right? So let's pull up kind of the monthly and talk about why all this stuff kind of aligns, right? Because when you're looking at price map, aligning larger time frames with the smaller time frames paints a larger picture for you. And when you can get alignment across a lot of time frames, it's very beneficial. It adds signal acceptance, right? So you can see that the green level for the monthly, right? We get this monthly at the beginning of every month, right? So we're going to get a new one starting April 1. The green level was that 78, right? And so this was all of that noise that was surrounded around the Bitcoin reserve, right? If you took a step back, and yeah, it was a hard trading environment, right? The range was incredible. It was non-directional by any means, right? It went up to 95, down to 82, back to 93, down to 78, right? But if you took a step back and you looked at kind of risk markets, right, which were the S&P 500, you took a step back and looked at the news, you looked at all these kind of things, and then you really just looked at the structure of the market, the green level was to be supported if the market was going to be good, right? And we talked about that a little bit in the Discord on some of the weekly time frames, right? But that was the level, right? And so this is a normal low, right? Very similar to if we get a breakout here in the next 12 hours, this would be a normal high. That green level changes, as I talked about, and that's going to be the energy of the market. That's the magnet of what we see in our data, right? So The fact that we're over 87,673, right, aligns here, kind of in the middle with the weekly, right? So 86 up to 86.73 can be kind of that lower range, but a lot of it, to get some more granularity, is the previous week's high, just to make it super simple. But to the upside, right, we're making a positive show over the directional, right into the previous month's mid, right, which is basically we tested the low, we tested the close, the mid would be normal again, right? And if we get through that, that's going to go to 92, right, ish, 92-ish, and from there, right, we'll be at 92.5, and that would be a normal top there. So that is kind of the outlook for Bitcoin. And if we break here, right back down to 84, and we're just digestive for the rest of the week, barring any large, outsized new news announcements, right? Let's kind of jump over to Ethereum, take a look at that. So we have the multi-book again here on Ethereum. Ethereum's a bit different, and fundamentally we talked about what's kind of going on behind the scenes with the institutionalization of the product, right? So the fact that I can't come out and buy a spot ETF, right? Or it's just the accessibility to Ethereum is a little bit different than it is Bitcoin, makes it a different product, right? And the simple fact that it also is, in most kind of pitches on the investment side, it's the secondary investment, makes it a little bit more volatile. It also makes it underperform, right? So we're kind of waiting for the catalyst for Ethereum, right? And so let's talk about a few catalysts before we kind of talk about the outlook. For those that are in the Ethereum community or not in the Ethereum community, the Petra upgrade is going to go onto testnet in 2 days. What does that mean? Basically, they're taking this whole upgrade, they're putting it on testnet, and then from that process, they expect about a couple week process of protocol teams that already have deployed their code base on Ethereum to come over and test it, make sure that there are not any large issues, right? And the Ethereum core team will monitor the stability of Petra and the testnet, right? And if all goes well, right, there are not large issues within protocol teams, there's not large issues within the stability, then the expected earliest launch date of Petra onto mainnet, which would be an Ethereum upgrade, is April 26th. So 30 days from the testnet launch, which would be April 26, 2025. But more than likely, there's probably going to be a couple weeks buffer around there. So the expectation for the launch of Petra is May still, right? Largely, this would be seen as a positive stance out of the Ethereum community. They are notorious for being a bit slower in terms of rolling out new innovations, all these kind of things. They're a larger kind of ecosystem, right, than some of your other coins. So it'll be interesting kind of to see. Those are positive catalysts that are literally here now on the horizon that could directly impact price, right? Couple things are, obviously, if it doesn't go well, that probably has a negative impact. But if it goes muted, likely has a positive impact. The reason for that is because a lot of negativity is already priced into the market, right? So year to date, 3,800 all the way down to 1,800. It's almost 50% declines, right? I think it's more, yeah. And so here, let me do the math here. 3,800, 1,800 divided by, it's around 47% declines, right? And so that, I mean, it's an incredible range for the first quarter of the year. But that's a lot of negativity that's already priced into the market, right? And so even if there's negative events, it needs to be outsized negative than what's already priced in. So that's kind of why leaning towards, if it's muted, right, it probably has a positive effect. If it's outlandishly bearish, right, obviously it'll have a negative impact, but it probably needs to be more than just negative because those prices are already priced in, right? We'll see. It's still a binary risk, right? in the market, right? So monthly and weekly. Ethereum's a bit different than Bitcoin. So when we looked at Bitcoin's monthly, you notice that the green level was below the market. If you look at Ethereum's monthly, right, it's above the market. And part of the reason for that is Ethereum's just really been honestly in a downtrend for all of the year, for one. And then since December of 2024, it's really seen some issues, right? 4,200 were those 2024 highs. And then to see a price all the way down to essentially 1,700 is a problem, right? So it's got a lot of ground to make up. It needs a lot of positive catalysts, and then fundamentally it just needs a supportive backdrop, right? And so macro looks great in terms of the crypto industry. There's a lot of things that are going on. Kraken is buying and acquiring Ninja, which is a FCM here in the US. It's a large FCM, so that they can offer crypto futures to the US markets. Coinbase is in advanced talks with buying Deribit, which could potentially offer in-kind or cash-settled options outside of the CME to the US market, which would be very interesting. But it's got a lot of ground to make up. And there's a lot of people that have bought the market and are just trapped along. And that doesn't go without kind of digestion, right? So let's take a look at the weekly, right? The monthly is pretty much gone. Let's take a look at the weekly. We're over the previous week's high. You can see that is notated here by PWH. Same thing. It rotated off the directional previous week's close, and then it just made a play overnight for these highs, right? For the market to remain good, it needs to be over 2060, right? And the reason for that is just needs to be over the previous week's high. Logically, if it's over the previous week's high, it can make new highs, right? Where does it go? The UP, again, there is a large chance, a statistical norm, that we break out of a critical range, right? Ethereum's really been digestive for quite some time now. Falls have come in a bit, not as much as Bitcoin. Bitcoin's volatility market's gotten crushed. But last week's positive show with this week's positive show as well, right back to this level, that's positive, right? So as long as we can hold the previous week's high, our real extension here to that magnet would be 2,400. That would be an incredible show of the last week of trade in March. Right, but first we got to base over 2085, and we got to make a play for 2200. Right, 2200 is going to be a key level to monitor. But if we can go for that breakout, yeah, all signals point to that 2400 by end of week. Right, where does that become invalidated? Because the R level is above, R level being this green level here is above the market. It dictates a negative sentiment bias, which just means that there are some trapped longs in this market, which I'm sure we all know. And so where to kind of take a look to see, hey, I should lean off the long side of the trade. One is if trade can't base over the previous week's high, that's here now for the remainder of the week. That's your level, right? Let's say it does, and it makes a play overnight for 2,200. A price over 2,200 that goes into this black area and then trades right back down to 2155 is not positive. That's what we consider to be a sell UP reversal, right? That basically just dictates a lack of buying and follow through on the momentum side, right? The market could still remain positive, but we could then just chop for the remainder of the week. If the market is going to make a positive show with momentum, it needs to go and it needs to continue to go. That would be then optimal kind of theme for the week. And that starts Saturday night, which the first step has already happened, but tonight matters as well, right? As long as we can hold the previous week's high, there's a shot. But if we can't, and let's say we get some selling overnight, the expectation then changes, right? And digestive trade and churning around these levels, which has been kind of the narrative of Ethereum, and just really frustrated traders, really frustrated anybody that's along Ethereum for the better part of this year already, right? Let's talk about downsides, because Ethereum is weaker than Bitcoin. So the downside always is very real when you're talking about a weaker of the two. 2060 is that level that dictates kind of a problem in the market, right? If we can't base over 2060, then the expectation is we just revert and we trade right back down to 1972, which is that weekly directional. Frustrates a lot of people, continues to frustrate traders, continues. Anybody that's long calls just gets crushed. Anybody that's long puts gets crushed, and it just becomes frustrating, right? That would be a very frustrating market to be involved with. So it's super easy to look at the previous week's high and say, look, if the market's not basing over here, we're just backing off, right? Leaning off the market. It's not performing optimally. And that means it doesn't make sense to push the risk, right? If the market really wants to make a negative play, that would be dictated by a trade that cannot hold 1972. If it cannot hold 1972, the outlook is it will trade to 1861, which is kind of where it's kind of chopped around. But the fact that it took a positive play and then failed, you got to look lower, right? Because that could be a potential fake out for folks. And that potential lower trade would end up right around 1638 to 1750, right? Let's take a look at Bookmap and see where some of that resting liquidity is. So resting liquidity is around 2110, 2130, or sorry, 2115. That's basically right here, right? So these recent highs areas, right? So this was roughly around 2100, so about 15 points over. You have willing sellers sitting there in the book. Monitor those. If those change and those adjust, that matters, right? And then look for the market to take a magnet stance to those, right? On the downside, exactly what we're kind of talking about. Why are these buyers here? They're supporting the previous week's high, right? They're looking to buy the dip, and potentially they're probably systematic traders. Whoever it is, they're just sitting in the book, right? So that is your level. Give the previous week's high some variance by monitoring this liquidity here, right? So that's the color that Bookmap provides, which is great. Yeah, so those are both markets. I know that we have a couple new folks that are in the on the Discord stream. So at the end of this, and then I see some old folks as well. So at the end of this, I always like to keep some time to open it up for questions. So any questions that you guys have, make sure to drop them over in the Discord. I'm going to pull up the Discord chat, and then I will get to them. So let me see here. We can answer them right here. And then if there's no questions, we'll kind of end it early, and yeah, and then I'll post some new dailies that we can take a look at when I get those tonight. So. And then if you're on YouTube, make sure to join us on Discord. We are actually trying to grow the Discord, and I'm on the desk quite often. So more than happy to help, more than happy to pop in and talk with everybody. Cool. Let me make sure there's not a thing in here. Great. I'll give it about 30 seconds, and then I see some people. And then as we kind of wait, let's talk about, I know we've kind of talked about in the past about statistical norms, and we had a whole webinar series around that and what we've been finding. Let me draw a little rectangle here for you guys, just as we're kind of waiting for that question to come in. This is what we find to be a statistical norm for highs, right? And so I came in off the morning on the desk and said, look, this is probably the extension here for the digestion And it doesn't mean that it has to be negative by any means, but it just means that the momentum likely slows throughout the session, which we define as 0 UTC. Yeah, so Melik topped in here, and yeah, I appreciate it. So we're switching over the sessions so that we can be a little bit more consistent. If you hop in and you check out some of the lives and you have questions, or you want us to cover some other coins, whatever you want, we can do that. One, on a weekly basis, but two, we can also chat about it here in the Discord too. So by all means, it is kind of up to whatever is most valuable. So yeah, XRP. Here, actually, let me take a look. I'll log into our data here, but I'm going to take it off the screen so that I do not expose my password. I am, just kind of disclaimer, I'm not actively involved in the Ripple community. I traded Ripple, I don't know, 2017, and then haven't touched it since. But we do cover it and we do watch it. It's been incredibly active. And the options have been also very active, which is super interesting to watch. So let me come over here and then I'll pull up this so that you guys can kind of see how this goes. So this is our website. Let's do XRP. Oh, let me see if we actually cover it. We should cover it. Let me see here. These are all the symbols that we cover. Oh, wow. We actually don't cover XRP. We must have just taken it off the database. So unfortunately not. We can't dive into it. But here's kind of my hot take on XRP is there's a lot of positive catalysts. So momentum matters there, and it seems to have correlation to Bitcoin and all of these. I would lean, and it's more or less, there's the binary events, right, which is kind of the news, and then there is the kind of macro events, right? So we kind of talked about the macro events. Macro events are going to probably outweigh most, right? So those are all things to kind of lean on and look at. Or D, I know for a fact we don't actually cover. So if you guys, here, let me see. These are all the symbols in which we do cover. So, I mean, feel free to drop in anything, but I'm not going to take a hard stance just because I don't want to mislead you guys. So, but we are active in Bitcoin and Ethereum, and we can pull up the rest of all of these if you guys had any questions on those too. So we've done Stephen often. I know Stephen's in here, and Stephen's around all the time, so I always like to call him out. We've done Doge, we've done DOT, we've done Solana. Solana's interesting. So yeah, but yeah, I mean, I'm assuming if you sold your Ripple, it was at a profit. If it was at a profit, there's no harm, no foul, right? Taking profits never made anybody broke. Great. Yeah, exactly. Yeah, it was an opportunity. It was cool. I remember the day the news hit. So it was dormant for such a long time. I followed some of the lawsuit and kind of how that was going on, because I was it directly impacted kind of the broader market, right? The crypto market, how the SEC was taking a stance, how litigation was being handled in the US, all those kind of things. So yeah, it was super interesting. But yeah, the options exploded that day. It was wild. So Wyckoff theory. I'm actually pretty familiar with Wyckoff. But no, this is our own proprietary algorithms. So the kind of the inception, and Malek, I think you're new here, right? So this is the origin story is it was started in the pits here in Chicago, in the S&P pits and in the Eurodollar pits, the index pits and all that. So this has been used since 30 years now. There's 3 decades of work here. And then we actually, we're continually expanding it and working on it every day. So there's a lot of cool things in which we're going to roll out over the next year that we're really excited about, that we can talk about here in the Discord as well. So cool. Awesome. Well, thanks for stopping by. We can wrap it up there, and then everybody enjoy your night, and I'll drop in some data for you guys when I get it, just on the daily, and we'll talk about some normals based on kind of what we talked about for the weekly outlook, so that you guys have some better kind of points of reference, leaning on some data, right? So thanks for stopping by, and then I'll catch you guys next week this time. So let me know. So enjoy the week, and I'll be around. Feel free to ping in Discord and enjoy. So.